Rod.
Um, Hello, everyone. So today, it's still early. We had this seminar also yesterday, and I think it's really important to try to talk about this as much as we can. And since we're a little bit less crowded than yesterday, and it's still early, I think maybe this one can be more interactive. So please, the main reason I'm here is to try to send an idea, a message, and if it resonates, if you have any questions, I would be so happy to discuss it with you. I'm a senior market analyst at Equiti Group. We're more than just a global broker. We're a fintech. We have different products besides the CFDs. We do have also wealth management. We do have as well a gold app where it's the first of its kind. You can buy gold directly from an app, gets delivered to you. But we're not going to talk about this now. We're globally licensed and as well licensed in UAE. And as for our products, I'm not going to talk a lot about Equiti. If you need any help, if you're interested, you can go to booth 9. But I want to discuss with you what we all feel is happening now in the markets. Crypto's up, stocks are back up, gold reached new all-time high. It's just normal for gold before dropping. So those who are looking for a long-term investment, not just to trade, what do we buy in an environment like that when everything just feels super overbought? And the main thing I want you to take into consideration or to remember, if nothing else from this speech, that don't really follow what you hear in the press. Don't really follow the headlines. The headlines are usually, I want to say all time, but let's say usually late. Main example, if you want to check what happened 2 weeks ago when the markets were dropping, when we were expecting a recession, when the tariff war was at its peak between the US and China, we've seen this huge drop. And after that, what happened? Did the prices go back up or did they continue in their bear market? We've heard about the bear market. We've heard that, okay, we are entering a recession. We've heard that it's really bad. Donald Trump's going to turn, all stocks back to red. But then prices picked up. The charts told me another story. And the panic was just a way to buy the drop. And this is NASDAQ just after the news, just after when the peak of pessimism stroked the market. 20% recovery, and now even more. S&P, 5%. I think now it's even less than 5% away from its all-time high. I don't think that's a bear market. And we should have known that. And whenever I was requested to talk on some press platforms, I was always, the question felt like it's forced for me to actually say that, yes, the situation is bad, probably the recession is going to continue. And I could try to fight that. Like, okay, but we need to remember Donald Trump, he always comes with the most unorthodox card, the most aggressive, just to then play it back down. And he's never going to go that crazy. He's never going to be enemy with everyone. It's obvious. And the retailers bought into the fear and just sold and lost while institutions were positioning. They were buying NASDAQ. And the headlines were saying the total difference. So if you want to really know where we are heading, I'll give you an easy way. Follow the liquidity. Let's not follow the headlines. Let's not follow my opinion and your opinion and another market analyst's opinion. Let us try to follow the liquidity. And a simple way to say, like, there's liquidity, there's money, it's going to go somewhere. And usually it will go to the high risk assets, but then it's going to go everywhere in the market. And this is why throughout history, whenever the liquidity is going up, S&P follows. Whenever it drops, S&P follows. Basic logic. You don't have to read all the articles. You don't have to read the NFP. Yes, if you are trading, it's important. But then if you are positioning yourself, it's not that much. And this is the clear answer to what to buy when everything is overbought. Let us try to understand the definition of overbought. Overbought meaning there's a lot of demand. Is the price inflated? What does it really mean? Are we in a bubble? And this is what we say about NASDAQ, about S&P, that we are in an all-time high, right? So it's probably overbought. But then we need to remember everything we are, this sentence in itself is based on the fact that we are pricing things in fiat currency. Gold peaked above 3,000, reached $3,500. S&P peaked to this kind of point, above 5,000. We are pricing it in dollar. Bitcoin peaked above $100,000. We're pricing it in a fiat currency. But if I want to compare the move of S&P to gold, to crypto, Bitcoin, let's take it as an example, and how much, return on investment throughout the year, I don't think I can say that S&P did the best or it's overbought. Bitcoin performed better, gold performed better, and then S&P, because I'm pricing it in fiat currency, definitely it was in a bullish momentum. If I want to price S&P in gold, it's barely, there was a stagnation almost. If I'm comparing it to Bitcoin, it was not in a bearish momentum, but it was in a correction. So it's, whenever we're talking about a bubble, whenever we're talking about overbought, we need to understand the pricing, the very important piece of information that we forget about. What is it being priced with? And what does that mean? Okay, it's overbought. There's huge liquidity, trillions of dollars worldwide liquidity thrown in the market. Still, we're not seeing real ways to maybe bring down this liquidity. And regardless if it makes sense or not, regardless if it's logical, it's the fundamental support. But then if I want to follow the liquidity and where we think it's heading, this is, I think we go back. I think we'll be moving back up. And just as, all headlines were flashing red, recession's coming, worst performance for S&P, then VIX index, which is the volatility index, dropped back around 20. And that means that the markets are turning back to a more calm environment. And we've seen institutions buying the dip while the media were telling us otherwise. And this is why we always know, everyone knows that I need to buy the fear, sell the euphoria, but then we just don't do it because every time they manage to tell us it's different and the headlines get into us. Let's not try to do that. Let's try to see the data differently. And as we are expecting for, rate cuts to drop, but liquidity to remain in the market, all the geopolitical tension disappeared in a couple of days. And this correction was honestly a healthy correction in the markets in terms of percentage and how overbought was the indices. Then I don't think there's anything that might shake that image so far. And this is why we are expecting, even though there was like an overbought momentum in some assets, but it's still probably a bullish momentum. It will come back. So what do we buy? It's not definitely an advice. I hate to do that generally because it all depends on what you're looking for, your risk management, your goals and everything. But these are an interesting sectors, ideas to look at. You can mix and match. You can decide to look at some asset or some industry and try to hedge it with another asset. But these are some sectors that we did our research in the research department at Equiti, and we came up with these very interesting points. I think we can start with the first one, definitely what's happening between the US and China. And there's always winners. we're not talking about tariffs, we're not talking about products, but we're talking about the middlemen that won't be really affected, and they will still be important and part of the game, whether there's any escalation or de-escalation. So definitely it's about logistics. It's about maybe different countries in Asia, whether we want to have exposure on India, on Vietnam, on South Korea. I think these are important exposure to have during this year and the years to come. And definitely AI will, I believe that it's gonna be more adopted in different industries. And then if you don't want to buy the hype that we've seen in NASDAQ, NVIDIA, and so on, we need to remember what the AI needs to function, whether it's cooling, whether it's logistics, energy. And I think the growth in these industries can never be limited, or it's so hard to find it dropping, because more tools, more integration, more sectors will adopt AI, and then we will need more cooling tools, we need more energy, we need more maybe operations. So this is also something to take into consideration. I'm leaving some examples we can look at. I don't want to name one in particular, but also please try to remember that these kind of industry rely heavily on minerals, they rely heavily on silver, and silver didn't really go above, it didn't really, maybe we cannot compare it to the behavior of gold, so maybe also it would be supported first as a metal, considered a tool of hedging to inflation, to central bank policy, but also for industries that are probably going to boom in the years to come. Another maybe interesting assets to look at, what we call high beta assets. These high beta assets, to simplify it, is whatever have high risk, high reward. Crypto is a high risk, high reward. Usually, some stocks, but if we want to pick a certain industry, it would be small and mid cap. And maybe to lower the volatility that we can see in the markets, I would go for Russell 2000. And given that we're moving to less taxation, more support, and the one that is super sensitive to whatever changes on a geopolitical frame, on the Fed policy, it would definitely be the small and the mid cap. So have an exposure on that, on crypto, and on silver as well. We discussed that. Inflation's gonna remain, whether we like it or not. Prices might continue going up. So also keep an eye on sectors that don't really get affected, such as water providers, such as electricity, whatever, cybersecurity, health. They are more resilient. And given everything positive that we are expecting to happen, the hype didn't really show up still at these sectors. So this is something definitely you can take into consideration. Gold, since everyone is interested in that, we believe that central banks, but they're giving discussion support lower than 3,000. So definitely it's a good way to hedge. Definitely you need to have exposure if you're looking to hedge or to have a very diversified portfolio. Just you need to remember that gold on the short term is a high risk asset. When an asset drops by $200 in a couple of days, that's definitely not a safe haven behavior. So you need to maybe divide your point of view on gold on a long term. It's still supported, whether it's us moving away from dollar, China and US still have this possible, cards to play against each other. Central banks all over the globe, they're still holding on their gold. But at the same time, it's a long-term perspective. On the short term, it's turning to a high risk. While now, I believe crypto is probably less volatile. Stocks are probably going to have this bullish momentum strong enough where gold might turn into highly volatile on the short term. So that's mainly the the idea that I wanted to share. Overbought doesn't mean that it cannot continue going up if the fundamentals support that. If there's liquidity and there's no other place to put our money, then the prices will continue going up because there's no other place to go. And this is why, just as stocks were a little bit stable, gold dropped, Bitcoin cut the momentum and continue its uptrend because liquidity is there. It just needs a place, a direction. And I think it will remain there. We will live in a place where it's always overbought. Inflation remains until a new era happens. And this would probably continue supporting high-risk assets. My time is up, so I'm trying to wrap it up. But if you have any questions, I don't know if you have time for questions. We do have time for questions. And if you want more personal conversation, we're also at booth 9, Equiti. You can have also a discussion there with us. We would love to have you. So no questions. Thank you.